Good morning. The markets are moving and so are you. From the BizNews studios, this is BizNews Daybreak for Friday, the 30th of January, 2026. Can you believe it? The first month virtually behind us. I'm Alec Hogg, and here's the context you need to win the day. What goes up? Well, in an quite astonishing week, the gold price moved through $5,000, stabilized around $5,150, then surged to over $5,600, only to drop back last night to its current level of $5,200. The rand has tracked gold, improving from 16.10 against the dollar to 15.65 before following the metal lower. And it's now trading, starting the day today, at 15 rands and 83 cents for the dollar. The whiplash is almost palpable, and the best advice for individuals in this kind of environment is just stay on the sidelines. Let the professionals buy and sell and win and lose. It's like a casino out there at the moment. Big loser has been Bitcoin, not enjoying the uptick, but siding when the gold price fell. It lost a chunky 6% in New York last night, and it's currently trading at $83,500. Talking about New York, the big winner on Wall Street was Meta. We spoke about the results yesterday. They came out after the market. It looked like Meta would have a good session last night, and it certainly did. It surged the share price by 10%. We've got that in our portfolio. The big loser, though, was Microsoft, which was down 10%. 10%, double digits in one day. That's a quite extraordinary reaction to the quarterly results by the market. We covered both of those yesterday. Today, it's the turn of Apple, and we'll give you more about that in a moment. On the local market, it was the turn of non-precious miners to do some catching up. South 32, Glencore, and BHP led the large cap gainers on the JSE yesterday. Overall, the JSE was pretty flat, really. But the BizNews portfolio member Afrimat had a welcome return to form. That jumped 6%. Also up strongly yesterday was another portfolio constituent, Sabvest, which gained 5%. Big news globally, though, is that Donald Trump will only officially announce the new federal governor later today, but the name's already leaked. The man to succeed Jay Powell is one Kevin Warsh. Remember the name. You'll be hearing a lot about him in the next few years. Here's the very latest from our partners at Bloomberg.
President Trump is preparing to nominate Kevin Warsh to be the next chair of the Federal Reserve. Warsh is a former Fed governor, and we are told he visited the White House on Thursday. Earlier, President Trump said he plans to make the announcement Friday morning.
I'm not going to say it tomorrow, but just an outstanding person, and a person that won't be too surprising to people. A lot of people think that this is somebody that could have been there a few years ago. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
Now, Trump's pick may face a complicated path to confirmation in the U.S. Senate. Already, North Carolina Senator Tom Tillis has vowed to block any Fed nominee until the DOJ probe into the renovation of the Fed headquarters building is resolved. SpaceX is considering a potential merger with Tesla or an alternative combination with the firm XAI, another Elon Musk company. We are told any transaction could attract interest from infrastructure funds and Middle Eastern sovereign investors. Here is Bloomberg's Ed Ludlow.
My understanding is that there is a group of investors that are pushing very much on the Tesla idea, but nothing is final. As we all know, the background context is that SpaceX is making preparations for an IPO some point in the middle of this year.
That is Bloomberg's Ed Ludlow. Meantime, OpenAI is reportedly laying the groundwork for an IPO in the fourth quarter. The Wall Street Journal reports the company is accelerating plans as competition with its rival Anthropic intensifies. OpenAI is holding informal talks with Wall Street banks about a potential public listing. After the bell, Apple reported record sales for the holiday period. We have more from Bloomberg's Charlie Pellet.
It was driven by strong demand for the iPhone 17, growth in services, and a rebound in China. Revenue jumped 16% to $143.8 billion in the quarter, ending December 27th, setting a record. But Walter Piecyk, a partner at Lightshed Partners, says there are questions about Tim Cook's AI strategy.
Let's hope that Cook, with his deputies, can execute on this new strategy with Google. Under the current administration, where there's very limitations, they should have all the opportunities in the world to be able to do that. Let's hope they do it by the end of the year.
Apple is predicting revenue growth of up to 16% in the second quarter. In New York, Charlie Pellet, Bloomberg Radio.
The U.S. has been investigating allegations that Meta employees can access messages sent through WhatsApp. Now, Meta has said the chat service is private and encrypted. However, former Meta contractors claim they and some Meta staff had unfettered access to WhatsApp messages. The claims are being examined by special agents within the Commerce Department. Here is Bloomberg's Sarah Fryer.
We do know that they interviewed these former contractors, and we're looking into this possibility, which directly contradicts how Meta has marketed WhatsApp, and indeed how users have come to expect their messages to be handled on the app.
That is Bloomberg's Sarah Fryer.
So more detail now for you on those Apple quarterly results with Mark Grumman, Bloomberg's managing editor for consumer tech. Now, I can't remember hearing someone quite as enthusiastic when reporting on quarterly numbers as Mark is here.
This is a massive quarter. This is a home run, their greatest quarter ever by orders of magnitude. It's a gigantic beat on overall revenue. China is back. You have a big beat on the iPhone in particular. $85 billion quarter is just insane. The installed base, 2.5 billion. The numbers are just beyond excellent. We could ignore the fact they missed on wearables, home and accessories. We can ignore the fact they missed on Mac. We could ignore the fact that they barely crossed expectations on services. I guess none of that matters when the iPhone is selling so well.
Yeah.
But still, there's the big existential question of what's next. It's an important question because of AI, and Apple absolutely needs to figure out its AI strategy. There needs to be an AI reckoning of some sort there. But they just bought themselves a very long time with this just insanely great quarter.
Well, Anurag Rana of our BI team, he talked with Tim and I just moments ago, and he talked about, how they're working with Google when it comes to AI, relying on them right now for their models. And so they're not doing the big AI spend. That makes sense for now, too. So do you agree that that's kind of a smart strategy now and kind of waiting it out a little bit, but at some point they've got to kind of do their own thing?
So it's not that they're waiting it out, it's that they need to do it. And so they're partnering with the best partner they can that's going to offer them the best pricing power, which for now is Google. They initially wanted to work with Anthropic, but from a pricing standpoint, that didn't work out. They couldn't work with OpenAI because they're, hardcore competitors at this point. So Google is all who was left. And obviously the judge didn't break up the search deal there. So it made sense and it aligned pretty nicely for them.
Okay. Do we know yet how Apple was able to beat expectations in China? You said it minutes ago. It is back in China. You're holding up an iPhone right now. That's what they did?
I'm answering your question.
It was the iPhone 17?
The color orange.
Oh, it's the color orange. It's that easy?
That is the Pro Max. No, it's design. People buy the new designs. This is the first new design in half a decade. It got it done. That's why you do new designs, because you're trying to bring in new customers. You're trying to spur upgrades, and that's the way to do it.
Didn't they know that?
Of course they know that, but it takes time to do these new designs, and you kind of want to get it right. And then you can't do it too often, because if you do it too often, it doesn't have the power that it has if you do it only every so often.
All right, 6 minutes after 7 o'clock. Welcome back to BizNews Daybreak. I'm Sarah Fraser. We're talking about Apple. Apple is reporting revenue growth of 16% to $143.8 billion in the quarter. The Wall Street Journal reports the company is accelerating plans as competition with its rival Anthropic intensifies. OpenAI is holding informal talks with Wall Street banks about a potential public listing. After the bell, Apple reported record sales for the holiday period. It was driven by strong demand for the iPhone 17, growth in services, and a rebound in China. Revenue jumped 16% to $143.8 billion in the quarter. The Wall Street Journal reports the company is accelerating plans as competition with its rival Anthropic intensifies. OpenAI is holding informal talks with Wall Street banks about a potential public listing.
The 8th Annual BizNews Conference, to be held in Hermanus from March 10 to 12, 2026, promises to be a feast of brain food, insights, and ideas. The summit of shifting perspectives, second-level thinking for a sustainable South Africa.
Dedicated followers of BizNews, and particularly here I'm talking about our subscribers, our members, our paying members in other terms, members of our tribe, will know Rob Armstrong. Rob Armstrong is an American who works for the Financial Times of London, and he and Katie Martin quite often feature as our members-only podcast for the week. Well, Rob is more than just famous at the FT. He was pulled in by David Gura, who's the host of Bloomberg's podcast, The Big Take, to talk about the taco trade. The taco trade? Well, here it is.
So far this week, President Trump has threatened to raise tariffs on South Korean exports to 25%. He said he's okay with a weakening dollar. And Trump announced a massive armada is heading to Iran. At a speech in Iowa, the president once again criticized the Federal Reserve chair.
We call him too late. He's too late. Jerome, too late, pal. He's too late.
Trump's latest attack on the Fed's independence came in the middle of a 2-day meeting on interest rates. And, as expected, policymakers decided not to lower them. It used to be any one of these announcements could have upended global markets. But in the second year of President Trump's second term, investors seem to be shrugging them off.
It is Taco Tuesday, but it seems that every day is a taco day these days.
Is that taco trade sort of emerging here once again?
The taco trade, if you want to call it that, the boy who cried tariff.
TACO, of course, stands for Trump always chickens out. And this is the theory that Trump is not powerfully committed to any policy position in general.
Rob Armstrong is a columnist for the Financial Times and the co-host of the Unhedged podcast. He's also responsible for that taco moniker. He came up with the acronym.
So when he makes an extreme threat and he is faced by resistance, either from markets or from the body politic, he turns around and walks the other direction. The guy folds, is what it says.
Since Election Day in 2024, many investors have been making a bet that whatever Donald Trump threatens to do, he probably won't. It's unlikely to happen.
The taco trade is the smart money when the dumb money panics and sells on the last crazy thing the president said. That's when the smart money buys.
This week, Bloomberg Economics published a report analyzing all the times President Trump threatened to raise tariffs and found that roughly 3 times out of 4, the tariff he threatened didn't materialize. In other words, the taco trade was right far more often than it wasn't.
More than one economist has pointed out to me that taco seems like an unstable equilibrium because, each time we go through the cycle, the market is less impressed with the stuff Trump says.
Yes.
And so in order to get the response that would make him change direction, he has to say progressively crazier and crazier stuff. And eventually you drive the car over the cliff and the joke's on everyone. I ended up writing about this pattern of big talk, huffing and puffing, strong market reaction, Trump pulling back, the market recovering. I just needed a short way to refer to this thing that just kept happening. Taco was funny. I wasn't aware that I was doing something wonderfully clever at the time. It's a really simple claim underneath there, that the president doesn't really care about anything. And so if he is forced to pay costs in popularity or power for a policy, he'll always change it. That could be false, but that's the serious underlying thesis, that there is no there.
And that markets trade on that assumption.
And that markets trade on that assumption. Exactly right.
The FT News Briefing usually has a look at things like politics and the big moves in international markets. Not too often do they look into mining, but it's a reflection of the way the world is at the moment.
Precious metals like gold and silver are hitting record high prices. And because of that, mining companies are getting a lot of love from investors too. Camilla Hodson covers commodities for the FT, and she joins me now to chat about this. Hi, Camilla.
Good morning.
So just put this rally into context for me. How big is it?
It's a really extraordinary rally that's happened in really not very much time at all. What we've seen is over the past month, the 50 biggest mining stocks, so miners like BHP, Rio Tinto, Anglo American, that are listed around the world, have added almost $500 billion to their market capitalizations. And that's a rise of about 20% over the last month. The bigger picture is that the mining sector overall is not massive when it comes to sectors like technology and AI. And so lots of money going into mining has a kind of outsized impact because something somewhat small is getting quite a lot bigger. But still, it is an extraordinary change in not much time.
And so, Camilla, why are these metals and mining companies a new target for investors?
It's part of this really interesting moment that we're in, I think, where there are conflicts around the world, there are geopolitical tensions, people are feeling this sense of uncertainty. And so people are looking for places to put their money, places that they think are going to be safe. And this is all coming in the context, too, of people losing confidence a bit in the US dollar, which has historically been something seen as safe and a good bet. And so gold, for example, is often what people buy when they don't know where else to put their money. But gold is very expensive now, and that's causing people to look elsewhere, but still within that same sector. So silver, for example, has really rallied in price in recent weeks. We've also seen record highs for copper. And I think the mining stocks are also benefiting from this because these are the companies that make things like gold, silver, copper. And so they stand to benefit from rising prices.
So these rising prices are pushing up the valuations of these mining companies. How do analysts that you've spoken to feel about that?
I think for a long time, analysts have felt that the mining sector has been kind of unloved, and perhaps also that the valuations of mining companies hasn't really kept pace with the actual underlying price of the asset or the value of the metals that they produce. It seems like maybe there's a sense that that's changing and those two things are starting to come together. So, for example, the share price of a gold miner is perhaps more reflective of the value of gold. But equally, I think people are cautious. There's a sense that, you need to be careful not to just jump on a hype train and put your money into a junior miner that perhaps isn't ever going to actually build a mine.
So given all this geopolitical uncertainty that you've been talking about, does it seem like this rally still has room to run?
I think investors and analysts are fairly optimistic, particularly when it comes to the mining majors, the big established companies that do produce lots of metal and have big revenues and are looking around at the moment for deals and ways to grow the business. There's also a sense that many metals prices are likely to keep rising because in the medium term, we're likely to see shortages of things like copper and lithium and potentially a whole suite of other metals. So in that sense, analysts do think there's further to run. But of course, with markets, you never really know. It's difficult to forecast. And also, as more generalist money and kind of retail investor money, as opposed to specialist money, goes into the sector, there's always a risk that those investors get spooked or take their money out once they think that they've made enough, and that brings prices down.
Michelle's a mom who traded in her Fiat 500 for this beast right here. But why the momentous move, huh?
I needed something bigger to keep up with my growing son and his many sports bags.
When you traded in your car with WeBuyCars, was it an easy conversion?
I see what you did there. The process was just so easy. I was given a tablet, had to sign, and that was it.
Basically, WeBuyCars is no mess, no... Okay, it was nice chatting. WeBuyCars, the easiest way to sell your car by far.
There's a lot of concern about artificial intelligence taking jobs. And one of the doyens of financial journalism, Tom Keene at Bloomberg, applied his mind to this after talking to somebody in his own industry who suggested that this is pretty much overdone. Let's listen to Tom's take.
Providing cover today was Brian Weiser. He is legendary on Wall Street for looking at the ad business and studying TV. He's with Madison and Wall. Let's listen to Brian Weiser on the moment at hand.
It's evolving. Here's the thing. I argue, and this is a contrary view, for all of AI, and there's a lot of fears that AI is going to replace a lot of people. I argue it's going to cause the need for more people because it adds more complexity. And the complexity is what requires people to manage the processes. We already saw this in ad tech. Ad tech meaning the automation of most core media buying. It was meant to automate the whole industry. No, it caused the need for more people. And you're going to see that in the creative side of the agency's world.
I can't emphasize enough how important that comment is, whether you agree or disagree with it, or even are removed from advertising and media and all that. We don't have a clue what AI is going to do. And there's somebody who's saying it's going to be a job formation machine. We will see. One of my conversations of the year last year was Nancy Lazar at Piper. She was just fabulous about the need to employ America outside of healthcare, outside of government. Nancy Lazar, again, like Brian, on AI this moment.
I think they've come to reality that the U.S. economy is actually okay. The unemployment rate seems to have peaked. Unemployment claims are down. Support for the Fed has actually gone up. Support's not the right word, but I think my confidence in the Fed has actually gone up, that they are seeing this what we think is a reacceleration of the economy supported by their own efforts. Rates are down 175 basis points. Nominal GDP minimum is 5, maybe it's even 6-7%. Rates are plenty low. You're getting green shoots. Small businesses are benefiting, although it's going to, and I think we're moving away from a bifurcated economy to something that's healthier.
I get it. I really get it. I remember when the internet came along and there was so much concern that the internet was going to wipe out jobs and there were going to be many more people in the unemployment queues. Well, I'm not talking about South Africa because we've got a different problem with unemployment. But when it comes to skilled people, the internet has just raised the bar and given many more skilled people an opportunity to either start their own businesses or find jobs somewhere else. And artificial intelligence looks like being something absolutely identical. Well, now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thanks for starting your morning with us. Have a great weekend and look forward to being back with you on Monday. Now go and seize the day.